Welcome back. Hope you're having a good morning. Well, for starters, the SGX should be suggesting a bit of a pullback. So let's see whether or not that dip gets bought into at some point of time. Our technical experts are back with us, Sudarshan Sukarni and Mitesh Thakkar. Good morning, gentlemen. Well, the day post the budget, we had a rocky one. Very, very volatile day of trade. Sudarshan, you go first. How do you approach the Nifty?
Yeah, good morning. See, the markets are now overtaken by events. And that may be news, that may be rumors, but once this happens, the markets become choppy, volatile, and essentially untradeable. There is no need for traders to enter into these choppy waters. We have to wait patiently for the index to give us a clear sign of what it may intend to do. So today is not a day to trade. Actually, neither the Nifty nor the Bank Nifty. In fact, today is not a day to trade even stocks.
Okay, got that. Mitesh, good morning. Would you trade the Nifty? If yes, how?
No, in fact, yesterday also I was not very clear. In fact, last couple of days we haven't been trading the index purely because one, we were heading into an event, and two, I think the overall trend wasn't very conducive to from the risk reward point to take a position. I think 17,400, 17,300 is a support area. 17,300 is the 200-day moving average, and 17,400 is an historical gap area. So I think around that level, you will see downsides being curtailed, and on the upside, getting an hourly or 2 hourly close above 17,800 looks very difficult. So it's still a narrow range, though I think we have made a fresh low yesterday on an intraday basis, but I don't think it's still giving a strong directional signal. The index to trade slightly could be the Bank Nifty. If it starts getting below 40,100, then I think another 400-500 points could happen immediately, and then we can also look at a position target of 38,600 on the Bank Nifty. So maybe there we'll explore some shorting if we see 40,100 being taken out today morning.
Okay, got that. Now let's come to specific stocks. Sudarshan, what would you trade?
Yeah, see, this comes with a caveat that today is not a good day to trade anything. But even then, Aditya Birla Fashions is an intraday short. The stock is in a bear market of its own. It's not participating in any rallies. The stop loss is 260. JSW Steel is a buying opportunity. It had a good day yesterday despite the Nifty's fall. Keep a stop of 719 and buy it. PVR is another short selling candidate, intraday shorts only. It's been sideways, it's very choppy, not giving any signs of an uptrend. With a stop loss at 1700, it's an intraday short. And Tata Steel is a buy, another outperformer that could be bought for a positional trade preferably with a stop under 118.
Okay, got that. Thanks a lot, Sudarshan. Mitesh, your stocks?
Yeah. I have a mix of buy and sell calls. On the buying side is Indian Hotels with a stop at 320 for a target of 340. And Tata Motors on a decline, I'll still buy, let's say, a 4-5 point decline if we get with the opening trade. So around 441, buy with a stop at 433 for targets of 460. And on the sell side is Sun Pharma. Recommend to keep the stop at about 1,030 here, a target of 985 to about 980 on the downside can be looked at. And Godrej Properties is the final sell call. Here recommend a stop at 1171 for a target of 1125.
Okay. Thank you, gentlemen. I wonder we may not have time to come back to you for the 9-10 calls. Thank you very much for joining us. Now, let's get to another very big story. We're getting the auto sales numbers. Among them, strong tractor sales growth has continued for January for Mahindra & Mahindra. Total sales have surged 28% year-on-year. Hemant Sikka, the president, farm equipment sector at M&M, joins us to discuss the January sales performance and how he sees the year ahead. Thank you very much, Mr. Sikka, for joining us. Well, excellent sales, 28% higher. Does this look like something that will stay, this demand?
This has let us stayed through the year. I mean, you know that we have been upgrading our guidance through every quarter. And we are looking at currently the industry is very strong. YTD, the industry has grown by 11.5%. We at Mahindra have grown by 14.2%. So we have gained some market share this year again. So overall, the sentiment in the farm side is very positive. And this is on back of some very strong factors which are affecting growth in the agri economy. First is that you would remember that this time the southwest monsoon departure was delayed by a few weeks, and that has led to very good moisture content in the soil. So far the weather is holding up well. There is pretty cold in north area, which are very strong wheat producing areas, which again augurs very well for wheat production. So we are seeing that sowing for both wheat and pulses is at all-time high. And this is all giving very strong positive momentum to the rural sentiment in the market. So we have seen a very strong December, and again we saw a very strong January to back it up. Industry growth is 24% in January, whereas we at Mahindra have grown by 30.5% in this month for the domestic market.
Okay, good to hear that. Mr. Sikka, well, actually, just wanted to highlight that the markets have opened in the red, the Sensex and the Nifty. As you can see, rupees opened stronger, bond prices have absolutely surged. Now the 10-year is at 7.25, even less than 7.24 actually. So big relief in terms of the cost of capital for India Inc. as well. So Mr. Sikka, on that, how will margins pan out? Looks like yields have peaked off for now. We don't see too much increases in terms of cost of capital. As well, raw material. How does the package look? Do you think margins will improve?
So now we are in a silent period, so I won't be able to give any guidance on the margins, but I can broadly tell you that, as you rightly said, the commodities have been on a very benign trend, and we are seeing that benefit play out in the last 5 to 6 months. So we are pretty okay on that side. More than that, it is not right for me to say at this stage.
Mr. Sikka, hi, good morning. Prashant here. Any kind of pointed takeaway for your business because of the budget yesterday? What came out in the budget?
Prashant, I feel the budget this time has been an outstanding budget, especially for the agri sector. And the notable thing is, first of all, you would have seen that the agri credit allocation has gone up to 20 lakh crore for FY24. This was 18 lakh crore for the current year. So this is more than 10% increase that we are seeing in the agri credit. And agri credit, drives all the purchasing decisions, and it really helps in growing the agri economy. The second thing that we like very much is this Agri Startup Accelerator Fund. You know that internally in Mahindra, we also have an agri startup called Krishi. We are looking at a hybrid model on this, where it is both an on-ground presence as well as a very strong digital backbone to go with it. So we work with the farmers exactly to what the Honorable Finance Minister said in her budget speech, that Agri Startup Fund is aimed at changing the farm practices of the farmers. And this is what is our motto with our own internal startup, Krishi, where we are working with farmers across the India. We have thousands of plots, which we call technique plots, where we teach farmers on how to do farming in a different, more digitally savvy way. And this has got a very strong digital backbone. We have a full IoT platform, which we are selling with our tractors and our harvesters. So I think it aligns very well with our strategy. And we believe that this will really give a fillip to the startups in the agri space. And this will really help grow and bring in new technologies and new practices in the farming sector. The third point that I want to highlight, Prashant, is government's focus on horticulture. Horticulture has been growing in the country at a very fast pace. Good to note that of the total crop production, more than 50% is now contributed by horticulture. So they are growing much faster than the cereal crops. And this horticulture focus with 2,200 crore allocation for FY24 will also help us grow the horticulture segment. Recently, under the Swaraj brand, we have launched a product typically aimed at this segment of farmers, which is called Code. And we are already seeing very good traction coming. So I think with this support, we can start doubling down on our efforts on horticulture products.
All right. Hi, Mr. Sikka. Nigel on this side. So, I had a two-part question. One is on the market share. As you mentioned, you're growing at a faster clip in comparison to the market. So what is your updated market share? Where is that headed? And also exports, they're a small part of your business, but they have been contributing a little bit more. Do you have any targets out there in terms of the export contribution?
Yeah, Nigel, thank you for asking me this, because you know that we are the market share leader for several decades now, and very happy to state with you that so far in the month of January, our market share was 42.4%. And if you see YTD January, we are the fastest growing tractor company in India. We have gained 1% market share over last year. So our market share YTD January is upwards of 41%. So we are pretty happy sitting on that space. Coming to exports, we are seeing some slowdown in exports in certain markets because of the factors that we all know. Globally, things are slowing down. However, YTD January, we are still 7% up on our exports, and we intend to close with some growth by the end of March for this year. So our efforts to grow exports continue. The countries which are facing pressure on exports, for example, we have seen South Asia slowing down, Sri Lanka has slowed down, Nepal, Bangladesh has slowed down, which are traditionally very strong market for Mahindra and Swaraj brand of tractors. But we are now developing Brazil. We have developed some new countries in Africa. Our US business continues to do very well. So with all of this, we believe that we will close the year even on exports with a positive trend.
Mr. Sikka, it's a pleasure. Thank you very much for your time. It's a pleasure speaking with you. You know, in the pre-open session, I think Adani Enterprises is up 10%. So let's just have the prices up. I mean, in the pre-open, there you go. And 23.48, it's limit up in pre-open. And maybe we can have the other ones as well. Adani Ports
many of the ones
one.
with good cash flows, like Adani Ports, Ambuja and ACC, are all well in the green.
Yeah.
And there is still some, selling coming in the other stocks, Adani Green, Adani Total Transmission and Power. Those are the stocks.
I think
but that's pre-opening.
Adani Enterprises is a technical factor, as I said earlier today,
The short
because the
company.
FPO has been called off. So some of those shorts have become naked shorts out there. So I think that is one factor that plays out besides the fundamentals. So that's why, even in pre-open we mentioned that one could do well because of the technical factor.
Okay, fair enough. Right, let's go to
I
Sudarshan.
think Ports also is looking
The
up.
green,
That's the other one.
3%.
I mean, Ports yesterday at one point was down 25%, and that's the sort of cash cow of the group. And now it is up at about 5.12 or so. Sudarshan and Mitesh are back with us for a quick sort of 9.10, 9.12 calls. Sudarshan, what do you have?
Well, avoid the indices for today. Buy Tata Steel with a stop under 118.
Mitesh, what about you?
I will go with a buy on Indian hotels. Keep a stop at 320 or just below it and a target of 340 on the upside.
Okay, actually Indian Hotels has been a prized performer yesterday after that package for tourism and of course good results as well. But coming back to results, let's just refresh your memory. Britannia announced its numbers. Mangalam, can you refresh the numbers?
Well, extremely good numbers coming in from Britannia. 17% jump in their overall revenues, largely in line with street expectations. However, it was the EBITDA performance which really, surprised the street on the positive front. A 51% jump in their EBITDA, taking their margins to around 19.5%, closer to historic levels of around 19.8 to 20% odd as well. As a result of which, there was a big boost on the net profit as well. As compared to our expectations, of course, it was much higher because of an exceptional 375 crore gain coming in too. Entire EBITDA margin expansion was led by gross margins, which expanded by about 570 basis points year on year and 470 basis points quarter on quarter. The company attributes that to decline in moderation in input prices and at the same time their opportunistic covering of commodity exposure too. So all of this should bode well for the stock today. Expect to see it in the green.
Okay, all right, Mangalam, thanks for that. Well, Abhishek is joining us to tell us about the HDFC twins. Abhishek.
HDFC Limited, they had received about 4,000 crore from the stake sale that they did in the AMC business. So from there, 1,760 crore is what they are giving as dividends to their shareholders, which translates to about 11 rupees per share. And about 2,200 crore is what they will infuse in IDFC First Bank as capital. So remember that currently they have about 36.38% stake, which may go up to 40% level if they infuse the capital. Back to you.
Okay, got that. Thank you very much, Abhishek. So those are the stocks you should be keeping on your radar. Nigel, you want to quickly tell us about Ambuja's differential pricing?
No, I'm just looking at the difference between NSE and BSE. At least in pre-open, there's close to 17-18 rupees difference between the NSE and the BSE rate. And I don't know whether that's cooled off here. So that's a big change out there. Volumes as well far lower, but just keep an eye on that. For the time being, I've not seen this ever. 20 rupees difference on such a liquid stock. So that should align itself, hopefully.
Last few days, Nigel, the kind
anything
of
is possible.
Is, on big, names like Ambuja Cements, it's been incredible. I think we're just kind of counting down to market opening.
What's a bit shocking is the way in which banks are still selling off. I think their exposure to the Adani Group, if that was indeed the worry, has been somewhat clarified, but we continue to see a decent amount of sell-off in the banking stocks, Bank of Baroda, for instance. Okay, there goes the bell, and the markets are starting about 0.5% lower. It's not terrible, but it is in the red, down about 81 points, and the bank Nifty is not as bad as it was in the pre-opening. We do have a 1% cut. Adani Enterprises sticks to the pre-opening rate. It's 10% higher, circuit up. And Adani Ports as well is starting with a decent amount of green. The other stocks, Britannia is being congratulated for its results. ITC relief, the cigarette levy, is not very high. It's just about a 1% impact on its profit. Among other stocks, the IT stocks are doing very well. So clearly in step with the global cheer. NASDAQ has done very well. NASDAQ in pre-opening, pre-market also is doing very well. And so Infosys, HCL Tech, Tech Mahindra, TCS, Wipro are your next set of winners. IndusInd Bank is a little bit in the green after they clarified about their exposure. SBI Life actually is emerging. So Have the life companies been hurt enough? Well, HDFC Life doesn't seem to give that impression. It continues to see a 5%, 6% downtick. Okay, now down to about 4%, minus 3.8 on HDFC Life, but the banks are still in trouble. SBI, ICICI Bank, Axis Bank, HDFC Bank, all of them in the red. Anything specific on mid-caps?
Well, Lata, first, Hero MotoCorp, the numbers are a little bit disappointing out there. So that stock has opened up with a bit of a cut. You have Ashok Leyland on the flip side, but the numbers look good. So that's opened up with a gain of closer around 1%. Besides that, Tata Chemicals, that's getting a hard knock. That's down, in fact, 3% as we speak. So just keep an eye on that one. IDFC, they've declared a big dividend. They're going to be putting more money into IDFC First Bank as well. Stake goes up to around 40%. The street seems to be liking that for now. Both those two twins, they're doing pretty well in the initial tick. And Britannia as well, I think that initial take was well in the green. Ambuja Cements, by the way, that's cooled off and that's narrowed down.
Actually, I think everything is turned around.
Yes.
Look at, suddenly it's 100 points lower on the Nifty. This is kind of continuing from where that...
And Adani Enterprises is minus 10 now.
Adani Enterprises is down 10, transmission is down 10, green is down 10, power is down 5, ports is down 10. I mean, this is limit down. Ambuja, of course, is, as Nigel mentioned, down 3 off the highs by quite a bit. So yeah, I mean, actually, all the names in the group, ACC is down 3. So this is pretty much the entire pack, all down at lower circuits. So 160 points now, and this is coming in thick and fast. 160 lower on the Nifty, 17,455 straight away.
And what was the flagship, the flag bearer of the Indian markets last year, the Nifty Bank, is today down nearly 2%, and one would have thought that they're somewhat ring-fenced from the events of the last few days, but no, in spite of all the disclosures made, banks continue to see a lot of selling, 1.8% down at this point in time, 700 points on the Nifty Bank. Okay, we will be discussing Adani stocks and what they're going through for the rest of the day, but for now, let's turn to the budget and for what the markets have gleaned from the budget as well. We have with us Sridhar Shivram, Investment Director at Enam Holdings. Sridhar, first of all, congratulations to you. The only person who warned us that insurance being treated as a savings product is something that is going to stop sooner or later. He warned us even last year before the budget. It didn't come in last year's budget. It has come. So many congratulations.
No, there's nothing to congratulate, Lata. It's just an observation that, the government had already indicated that they were plugging all loopholes as far as savings products which were tax-free. And I've been very bearish on insurance for a while for exactly this reason, that they don't sell protection. Only 10% of life insurance companies is individual protection. Rest, almost everything is actually some sort of a tax arbitrage product, which is a savings product. I mean, look at 7%, tax-free products for 30, 35 years. You can still buy it. You have another 2 months to buy it.
Yeah.
I mean, it looks so absurd that when you can't get any such product, these companies are allowed, products like this. It was, something waiting to happen. I mean, you didn't need, rocket science to, get to the bottom of this.
Yeah.
So I think the government has realized it and they plugged it. And I think it's a good move. That's my view.
But do they become valuable now? I mean, HDFC Life has seen a huge knock. I think it's like some 25% down from its recent highs.
So Lata, my view is that, a large part of their growth was coming from selling these tax-free, easy products. I mean, it's easy to sell a 7% tax-free product to an HNI and go trying to sell an protection product that you pay 10 crores and you get nothing. It's a very tough sell.
Yeah.
But the day I see that protection is at least, or individual protection is at least 30-40% of their business, I would be keen to look at it. This is my view. I mean, obviously market has different views. Different people can take different views on this. My view is that unless protection is a large part, the savings products cannot take it's not a very profitable product. Like one of the commentator came yesterday and said the HNI product is not very profitable on your channel. So it is not profitable. How do you make 7% for 35 years with your costs attached to it? You need almost 8.5% product to break even. And it's a 35-year product. So you and me will not be around to see when this plays out. I mean, as I said, this is my view on life insurance. I've been a bear on insurance for a while.
ICICI Pru put out a statement that only 6% of their annualized premium equivalent, APE, comes from this over 5 lakh product. So do you think, therefore, at some point they become attractive?
Yeah, so it's possible, Lata, that different companies, so within that we'll have to look at it. The thing is that the growth aspect of insurance is
something
going
you're
to,
doubting.
Yeah, is going to go. So now you'll have to look at them for a while as a non-growth stock. So is it fair to pay 3-4 times embedded value? That's a question that people who hold the stock will have to ask. I don't have to worry about those.
Okay, all right. Sridhar, good to hear your view. And as you said, Q4 could be a bumper, actually. For those that want to go ahead and buy it, then, this is the last chance. You got just 2 months to go.
Yes.
But, besides insurance, the other big focus area has been the Adani Group stocks. And various commentators believe that there is some value emerging. But what's your sense? How is this, playing out, first, from a group perspective? And secondly, more importantly, from the market perspective, because the market clearly has got shocked, by this. Go ahead.
So I don't want to comment on individual stocks and, groups. But on the systemic banking level, I don't see any issues as far as this group or any of the other infra groups is concerned. I think the banks have learned their lessons from the past and have been very conservative as far as their lending is concerned. So I don't see any issue as far as the banking sector is concerned from the infra lending that has happened to this group or to any of the other groups. I think the banks have been very conservative. I think this is an overreaction right now.
So 1 minute, won't you fear? I'll tell you what I heard from the market yesterday. So I'm just posing that question to you. They have a lot of infrastructure projects, airports, Bombay Airport itself. And some of the banks have, promised or underwritten, committed to it. So will this be an overhang on banks? Banks were the pride. Everybody was into financials.
Yeah, Lata, so I'll not talk about, say, individual group, but if you look at airports in general, they are buzzing, they are booming. I mean, there are enough and more people who want to invest in airport infrastructure in India. They are very profitable business. So I don't see any issue as far as banks is concerned because they're collateralized with the cash flows of the underlying assets. So I don't see any issue as far as debt is concerned. Equity is something which the markets have to, figure out. But the larger concern is what happens to debt, which is why the financials are probably selling off. But I think as the dust settles, people will realize that some of these are companies which have cash flows. And infra generally is 3:1 debt equity. I mean, you can't put 100% equity in a debt project.
So, Sridhar, would you buy the banks? Given the kind of selling that we have seen,
definitely.
and if they're not really at risk.
I mean, there's no two ways. I mean, banks is one of our...
What's the preference there?
The top private sector and some of the larger PSU banks. We've been long on the PSU banks for a while. We think that even that looks very attractive given the fact that their credit cost continues to fall. In the private sector, we've already seen credit cost falling substantially. In PSUs, we are still, it's a work in progress. So as the credit cost falls, the profitability, as you've seen in the last quarter's numbers, that the profitability of some of the PSU banks have been up almost 50, 60, 70%, predominantly because of credit cost, not on the top line side. The top line will grow at maybe 10, 15%.
I mean, there we're already at a bit of a peak, right?
Yeah, so I don't see much of that.
Accelerate?
I think the only concern I'll add for financials is that currently there is a scramble for deposits. So if you actually see any newspaper, some of the largest ads are for deposits. I mean, 7%,
I'm sure NIMs
8%.
have peaked off because of that.
So that is one of the concern. I'm just highlighting the concern that it's not as if financials, everything is hunky-dory. There are issues, but I think this could be transitory because we have a large bank which is getting into a merger and 5 lakh crores of incremental deposit which they have to garner. So that's a stress on the system, and loan growth has been faster than deposit growth if you see the last 2 quarters. So everybody has been playing on the buffer they already had. I think that buffer is ending. So now there will be a scramble for deposit. Deposits did not keep pace with lending hikes.
Got it, Sridhar.
So now that will happen.
Go away from financials.
Just 1 minute. I just want to point out that there is massive volatility on the Adani names. Stocks. I mean, so, the circuits, Adani Ports, for example, is off the circuit, but, there is increment, every time it comes up, and we lost, it came up almost 5%, Ports, and then it sold off again. Twice over this has happened. So the margin there seems to be some attempt to buy the dip, but there is also incremental selling which is coming in. So it's not like, there have been 2 attempts, 5% recoveries which have been sold into. So this is not one way in that sense. But we'll see. Ambuja also came back into the green twice over, and now it's down about 2 3/4 again.
Prashant, just one point. ITC has hit a lifetime high, I think so.
I see.
It's in today's trading session, 370, I think it went to. And ITC, even yesterday, the market was a little bit wobbly. After that knee-jerk reaction, the fine print told you actually that the increase of taxes was not as much.
Yeah.
And in fact, as we speak, it's made the high point of the day. So those memes for the last couple of years, they've been put to rest, I think. So
No, the new memes are about...
Yeah, the new ones.
The new ones continue.
The old ones are behind them, and they've had the best
history.
last 12 months. ITC out of nowhere.
Yeah.
The big outperformer, yesterday and today as well, talking about volatility, stock is up 10%.
IDFC is the other one, which is gaining the most. It's up 4%. I think there is a dividend which is comes
dividend
through.
as well as
Yeah.
the investment.
That's 88 odd. What else, Sridhar, are you liking in the market? Because, I mean, when this kind of indiscriminate kind of selling happens, it throws up opportunities, right?
And also, isn't the budget a consumption booster? Because, I mean, there's a little more money left in terms of disposable income because of the tax cuts and some
from the budget
spending.
standpoint, I mean, Lata, we've discussed this many years that generally we are always skeptical of the numbers. For the last 2 years, I think you generally feel that the numbers are very conservative.
Yeah.
I mean, really can't complain much. And I think what I like most is the fact that despite all the challenges, they've increased the capex number from 7.5 lakhs to 10 lakhs. And to be fair, even I was skeptical at 7.5 lakhs that will they be able to actually spend that money? And I think we have to congratulate them that they've almost done 97%, or they expect to do 97% of that number. So I think I'm reasonably sure that they will be able to. I travel a lot, and I think I see construction work almost everywhere. I mean, and going at great speed. So I think when they're saying 10 lakhs, I'm sure they have a lot of projects which are already in the pipeline. And that, I think, gives a larger booster than the consumption booster. Because the consumption, it helps you in terms of, the money multiplier only for 1 year. An infrastructure project can help you for a much longer period. So I think the quality of the numbers is something that I'm very happy about.
So what does it lead you in terms of stock picking is what I want to know.
So, Lata, infra companies are difficult to buy. I mean, corporate governance is an issue, size is an issue. So I think the easier way to play is the financials. Finally, somebody has to fund some of these projects. So financials is a way, or ancillaries, or commodities, which is cement or some of the other things that go into infra projects. Directly infra, you have to really, look at deep into these companies to really ensure that you're not heading into a black hole. Okay, so that's how I will put it.
By the way, the market has recovered 100 points from the low.
And the mid caps in particular.
Yeah, the Nifty has come up very nicely. It's at 17,556 or so. Bank Nifty has also come up quite a nice. It's a green candle, which means we're off the opening levels by a very large margin. Sridhar, you spoke about IT already? Or
no, I haven't spoken about IT. But
any views? Because the Nasdaq is rallying in a very powerful way.
Yeah, so I would still wait to go decisively very long on IT. I would want to wait and see how the guidance for the next year emerges. Generally, what we've seen is that when US and Europe enter into a slow growth or a recession, the discretionary spendings normally come off very sharply. And
what if, like Europe, everyone got Europe wrong because of the weather? No one could see it coming. I mean, in the US also, it's not as bad. I mean, it's okay. I mean,
there seems to be a view, it'll be a
if it
mild
turns, then everything
it's possible.
changes, right?
Yeah, so the question is, what are you paying for it? Are they going to grow at, say, 15, 18%, or are they growing at 10 or 12%? So there's a big difference in terms of what you pay for these companies. So I think at this stage, I would still be underweight IT. And wait for some more clear signals, because there are enough other opportunities available right now. Yeah. I would prefer to play a domestic story right now, because what has happened in the budget and the consumption push, there's a lot more opportunities as far as the domestic story
is concerned. Only thing is for domestic, engineering companies, I mean, I hear a lot, valuations are rich, right? I mean, pick up Siemens, for example. Yeah. I'm just talking about that because I looked at numbers, what the 10-year average P multiple was, and pre-COVID where it was, where it is now, huge expansion. And it's not as if numbers have changed, turned around.
I would say there are a lot of other companies available.
Smaller
in the smaller space, there are companies available, especially some of them in the defense space, which are at much lower valuation and have very good visibility on growth. Maybe some in the consumer durable manufacturing space. So there is opportunity available.
In defense, someone was saying that there was a little bit of disappointment because it's not the capex has not increased that much. Any thoughts? Have you looked at the numbers?
Yeah, so I've looked at the numbers. I mean, defense has been roughly flat for 3-4 years. So it's not like the defense expenditure has been rocketing through like what has happened in the capex number. But having said that, some of the defense companies that we are looking at is more on the offset play, because then the customer is not the Indian government. It's actually some of the MNCs. So to that extent, your cash flows are more secure because there's always a delay in payment when it comes to government companies. So there are plays available in the manufacturing, in the capex.
Sorry, offset plays, can you give us an example? Purely as an example. What do you mean?
No, so offset basically is companies, so India is pushing on offset. Basically, your 30% of your production has to be made in India. So if you're an MNC in Israel or in the US, and if you're supplying defense equipments to the Indian government, 30% of what you sell has to be manufactured in India. So in the last 3-4 years, there have been large companies who have come up who do exactly this, which is basically do the 30% for the MNC.
And so are you referring to the Bharat Forge or HAL or what?
Yeah, some of them, I don't want to name companies, Lata, but people can easily do their research on this. But there are very exciting, interesting companies who do only offset work for MNCs.
Okay.
Yes.
The other thing, the other sector I want to ask you, real estate. It was seen as the start of a good cycle for real estate. But now the budget has a slight negative for luxury housing.
Yes.
Your capital gains can't be invested beyond 10 crore in homes. Is there
so that is a negative.
Here?
I think the larger negative is the interest rates itself. As the interest rates continue to go up, there is the affordability index.
But the deficit is lower than expected, or rather the borrowing. So actually, the yields have fallen by about 15 basis points.
We'll have to see how this plays out over the next 6 months. So if you go back, say 6 months back, your home loans were available at 7%. Today it's already at 8.5%. So the mortgage 1.5% differential is huge. But I still believe that there is a play in real estate. I'm not saying that it's not a good play. There is a play in real estate, and there are a number of good companies available now on real estate.
All right, Sridhar, before I let you go, you have two fans at home as well, my mom and my sister, after the point you made on gold and how, the lady fund managers at home, they are the best. But, just to take that gold point forward, and you made a good point about gold returns as well. Is there another way of playing gold? I mean, via the stock market, whether it's some of these gold financiers, or we had the management of CSB who has 47% of their mix, or just stay to the vanilla gold.
Simple.
Buy jewelry.
No, my view is buy the government sovereign bond, because it gives you 2.5% extra. I think my point is that people underestimate that gold is a hedge against the currency.
Yes.
So you miss the point, and most people and fund managers who argue with me miss this point because they keep showing me the dollar return of gold. And I tell them, listen, please, I mean, being a fund manager, you have to compare apples with apples. Yeah. So the rupee gold has significantly outperformed many of the time periods, the index also.
Yeah.
Or in some cases, it has matched the index. And my point is that it is as close as possible to the Nifty or to the Sensex over 10 years, 15 years, 20 years. It's an asset allocation call. And my point is that Indian women, despite all the negatives that people have spoken about gold, has continued to buy the gold. Whether they buy as jewelry or not, effectively it becomes a utility, because if you see the gold loan business today is 4 lakh crores or more. So it is not just lying inside the cupboard. There is an economic value which is getting generated out of that.
Indian women and Indian men also. No?
Prashant,
I wanted to say that. It was my father who invested in gold.
But I think predominantly, the women have done better. So I'll give credit to the Indian women.
Prashant
for buying
and me are
gold.
falling in line with that. Prashant.
We have to thank you.
Is there a choice?
No.
All right, Sridhar, thank you very much for joining us. Great to have you with us here, and thank you for coming to the studios. Well, the markets recovered quite a bit. We're down, 70 points. And we were down, actually, at one point, we almost came back into the green. Just 10 points or so, and then you would have been in the green, but fair bit of volatility. Surabhi is with us, joining us from the newsroom floor, and she's going to highlight what's happening to some of the bonds of Adani Group companies. Surabhi, over to you.
Hi, folks. Yes, I was just looking at some of the details on the news flow that's come in around Citigroup's wealth arm. So just in case you've missed this one, just to bring you up to speed, Citigroup's wealth arm is now saying that they're not going to accept Adani Group securities, both bonds and stocks, as collateral for its wealth unit. So it's a complete no-no, and it's in effect immediately. So that's obviously adding to the nerves and the sense of uncertainty around all the securities. Just to quickly point out what we observed overnight, we've pulled together a chart which has some of the most widely traded Adani securities, Adani bonds. This is what we're talking about. So let me just quickly tell you what the chart is referring to. The white one here is the Adani Ports and Special Economic Zone July 24 bond. And this is the one in which there was maximum volatility yesterday. We'll get to the up-close picture in just a bit. The red line is Adani Green. This is a bond due in September of 24. And the blue line is again Adani Ports and Special Economic Zone. But this is a bond due in 2032. So lesser volatility here. But let me focus on this area. Now, you can see everything is going fine. This is a 5-year chart, by the way. And things were fairly steady till about January. And this is where the price decline starts getting very, very dramatic, to say the least. Just to talk about this area, this is what we're talking about. And this is what we've seen actually right from the 23rd, 24th of January. And this is the price decline that was very evident in a lot of these securities. Let me move over and show you the extent of the price damage that we saw yesterday. This is just overnight trading. So again, I'm focusing on the Adani Ports and Special Economic Zone July 24 bond, because that's where the price drop was most apparent. That's this line, the white one on top. And if you see the kind of price decline that happened, we have moved from levels of about 88.90 all the way down to below 70. This bond, in fact, fell to 69.75 to be quite precise. And that's a 22.5% drop in prices in a matter of literally hours. This is overnight trading. These are all dollar bonds that we picked out, by the way. There was a recovery towards the end, but we need to see how much of it will be sustained. The fact is that it's a jittery market, whether you're looking at the Indian listed equity space or the overseas bond market. A lot of nerves and a lot of uncertainty about what lies ahead.
Okay. Point taken, Surabhi, and we'll keep dipping back to you for more updates on the global performance of the Adani bonds. Okay, now let's get back to results season. We have a company, Blue Star, with us. Blue Star posted good third quarter earnings. The company saw revenues rise by 20%. Order book has increased 47% compared to last year. However, the company has also seen a mild contraction in its margin this time around. Veer Advani, the Vice Chairman Managing Director at Blue Star, joins us. Mr. Advani, good morning. Thank you very much for joining us. Well, if you can tell us how this quarter also is panning out, fourth quarter, is the demand of Q3 also apparent in Q4?
Morning, Lata. Thank you for having me. Really appreciate it. So we had a good quarter, as you said, 20% revenue growth. We did have some contraction in margin, but I think EBITDA grew to about 105 crores and our profit before tax was at 80 crores. More importantly, our carry forward order book is up about 47% same period last year. So order inflow has been strong in Q3 in both the B2B and the B2C markets. In fact, in room air conditioners, in spite of a slow festival start, I think we ended the quarter very strongly in December. You asked about Q4. I think Q4 for the B2B businesses continues to be strong. January has been good. Order inflow continues to be very aggressive and impressive. And we're looking forward to a very hot summer and are really prepping for a big Q4.
Hi, Mr. Advani. On the margin front, it was a bit of a blip in the past quarter. How does it recover on a blended basis? You have told us vertical-wise, I think, you want one of them to go to around 8.5% or gradually. But on a blended basis, what could it go to? And also, Sri City, that's been commissioned, right? How much does it contribute in the coming year? That's FY24 as well as FY25?
Great. So as far as margins are concerned, while we continue to see stress on the gross margin, you can see that we've been managing our operating expenses relatively well. So for the quarter, EBITDA came in at 5.9%, which is, and it was 6% same quarter last year. You know that Q4 tends to be a much bigger quarter, margins do expand, and we're expecting that to improve. Now, while there's been some hardening of commodity costs as we're going forward, you know that we would have already bought all our raw materials for the entire summer season. So we're clear what our costs are. Pricing, we are keeping at the same levels as Q3. We're not able to increase prices at this stage. We want to see how the summer demand picks up and then take a call on that. So I think Q4, you will see an improvement in gross margin and, of course, in operating margin. Not dramatic, but it's a good direction that we're in. You asked about Sri City. We commissioned Sri City in January, so commercial production has just started. We're still serving most of our Q4 demand from our Himachal plant. The Sri City plant will ramp up month on month, and for the full year, it will contribute about 30 to 35% of the calendar year. January to December, we'll do about 35% of our demand will be served from Sri City, but it's a monthly ramp up. So that's how we're looking at it.
Okay, Mr. Adani, for F524, do you think that what the budget has done in terms of putting a lot of money in capex, right? And that seems to be a trend. It should greatly benefit the industrial side of things for you, the B2B. The impact should be very good. And if you can tell us, is there a volume growth expectation for F524 that you can leave us with?
So as far as the budget is concerned, there are three important things I want to talk about. One is they have started to look at the inverted duty issues, not for our category, but at a broader level. I think that bodes very well as a signal and direction for our integration into global value chains and for our exports to grow. So I think that's one directional change that I've seen. As far as demand is concerned, you're right. The 10 crore lakh capex move is going to be very, very positive for our industry and for Blue Star. You know that, in fact, they've singled out transport logistics as a major focus for that investment. Most of our business is not in roads, but we do participate in airports, railways, all of that side of the transportation investment. So we're very optimistic. Already you can see order inflow has been very strong in the last year when they increased the capex budget last year. So I'm looking forward to very strong order inflow growth next year. It could be well over 20%. As far as the residential business is concerned, I know we're still trying to understand the full impact of the tax slab changes, but I think net-net, it is positive for middle-class India. That's our main market. And I do think it's going to put more money into the hands of people, give them the confidence to come out and spend. So we're also seeing a big benefit for both our residential air conditioning business as well as our refrigeration business, which serves the quick service restaurant and hospitality industry. So I think the budget has been very positive for our industry and for Blue Star. Looking forward, we don't give forward outlook, but I think next year is going to be a very strong year for us. We're looking forward to volume growth, definitely, but really the focus will be on margin expansion and getting ourselves back to that gross margin that we used to have pre-COVID. I think it'll take us about 4 to 6 quarters, but it is doable. All
right, Mr. Adani, thank you very much for your time. Good speaking with you. Big moves. I mean, Ambuja Cements is up 7%. Let's have the stack up. ACC is up 3%. Adani Ports is off 10%, more than 10% from the lows. It's almost in the green at 485. These are encouraging moves which are coming through, and fingers crossed that you start to see some stability finally emerging. The other names, transmission, green, etc., are still down 10, but at least ports and the cement assets, they are being bid. There is buying interest, which is very, very visible, as you can see on the price.
Also in banks,
and that's why the call this morning was, if you're going to start off on the back foot, actually it'll be a good thing. If you start off the blocks up 100, 200 points, there'll be an issue. So starting off lower, closer to around the support levels, and now we've seen a recovery of 200 points from the low point of the day. The Nifty is up. The ingredients were there. FI is covering shorts. PCR moved to around 0.7 odd. And that's where the call this morning was. Starting off in the red, could see a bit of a short covering bounce, but let's see whether or not it lasts.
Yeah, absolutely.
There is.
I mean, incrementally,
actually,
the market tends
zigzagged so much in the first half an hour itself. So let's, be prepared for a volatile day.
Yeah.
Take a quick break, but you're going to stay with numbers, with earnings. We'll be joined by the management of KC International and TTK Prestige to discuss their Q3 numbers.